Bridging, buy-to-let mortgage. What are they? What's the difference? And when should you use it? So with regards to today's video, I'm going to be talking about buy-to-lets and bridging with regards to an investment property. So when we're looking at a buy-to-let mortgage, both of these are debt products, but typically a buy-to-let mortgage has a lot more strain on you as an individual, whereas bridging is more on the property and how much money it's going to make. For example, in a buy-to-let property, you will typically get 75% loan to value. What that means is if you purchase a £100,000 property, 75,000 of that is going to be a mortgage and 25,000 is going to be your own money. Now, interest rates massively fluctuate, but if you're purchasing in a company name, at the time of filming this, it's around 4 to 4.5% dependent on your situation. And the timescales used to be 8 to 12 weeks. We're really looking at about 16-week timescales right now, which is really quite frustrating, but it is, always has been, and always will be the lowest interest rate debt that you can pretty much get hold of in life. So it's a really great way to leverage other people's money to purchase assets that pays you on a monthly basis. Now, as I said, with a mortgage, it's largely based on the property, of course, but even more so on you as an individual. So people ask me all the time, if I'm under the age of 25, can I get a mortgage? Yes, but a bit harder. If you don't own your own home, can you get a mortgage for a buy-to-let property? Yes, but it's a bit harder. And how slow is it? Now, when you're purchasing a property, it's going to look at your credit file. So before you even apply for a mortgage, make sure you go onto Credit Expert or Experian, and you can check your credit file either for free or £15, something like that. And the reason I go through this is ignore the score. That's just not actually real to banks, by the way. It's just an indicator for you. But you can go through there and see, what credit have I got? Are there any CCJs, court county judgments? Is there anything that I've not paid before? And the reason why is you can sort that out before you actually apply for a mortgage. Once you tick the boxes from a credit point of view, they're going to look at you as an individual. Now, if you think about it, there's a market of over 1,000 lenders out there. And then the more unique your situation, the less lenders there are going to be. For example, let's say you don't own any other house. You don't even own your own personal residence. That shrinks it down to a few hundred. Let's say you're below the age of 25. Still under 100 now. Let's say, for example, you don't have 25% deposit. You've only got 20% deposit. Narrows it down. And so whilst there is likely to be a buy-to-let lender, unless you've defaulted, which is going to make it really difficult, by the way, but if you haven't done that, you're going to get access to one, but you just have to think to yourself, you might have to pay a higher equity portion, so you'll get a lower loan to value, and you will probably get a higher interest rate based on your situation. For example, a foreign investor in the UK will pay a higher interest rate. Then it really comes down to the property as well. For example, a key thing when you're getting a buy-to-let mortgage, because they want it as low risk as possible in return for the low rates that they're giving you, it has to be a habitable property, i.e. somebody needs to be able to live in it. So if you don't have running water in the property, as an example, you are incredibly unlikely to be able to get a mortgage on that property. And that is where bridging comes in. Before I jump into that, I want to talk about today's video sponsor, which is LENDLORD. I've been aligned with LENDLORD for a number of months now. I absolutely love Avi, who runs the business, and the entire team there. It's an incredible piece of software. And the great thing is, it's completely free. Not only does it help you find properties, analyze properties, it actually helps you fund the properties from both a mortgage point of view and a bridging point of view. And you can check them out for free, eradicating the need for a broker, saving you hundreds, if not thousands in fees per property. The way you can get access to that is click the link below, set up a profile. It takes between 30 and 60 seconds and it's completely free. Bridging is still a debt portion of a loan that's going out, but it's very different. It's largely based, not entirely, but largely based on the property rather than you as an individual. Now, don't get me wrong. If you have defaulted on multiple loans, you've never paid anyone back, believe it or not, you can still get bridging even if you're that sort of person. It just means that the property will have to be incredible for them to lend on it. Now, bridging, as it says, a bridge, is the idea of bridging from one finance to another. So often people will get bridging on a property, for example, that is uninhabitable. So you will need to spend money refurbishing the property, bringing it up to standard or a rentable or a sellable standard, and then you will either sell it on the open market or refinance or remortgage, get a new mortgage on the property that pays back the bridging for a long-term basis. So in essence, bridging is a short-term solution for your funding requirements. It's more expensive, the loan-to-values are good, but also they're a lot faster. So you might go, well, in what situation would I use over the other? The gist of it is, when you're getting mortgage debt, there's a lot of stipulations around the longevity of the loan, i.e. the lender wants you to have it for as long as possible. Pretty straightforward, right? Whereas with bridging, it's in everyone's benefit for you to have it as short term as possible. For example, mortgage rates massively change, but you can expect something like 2% entry, 1% a month, and 1% exit. What that means is, say I borrow £100,000, I'll pay £2,000, 2% entry, £1,000 a month, 1% a month, and £1,000 exiting the loan. That means the shorter term the loan, the cheaper it is for me as a percentage, because I'm getting it in and out as soon as possible, but also for the bridger, it's the more money that they actually make, because they want that 2 and 1%, get the money back, and then loan it out to somebody else. So with it being so expensive, why would you use it in the first place? Well, this is where you actually get a really strong negotiating power. Because if somebody's looking to sell their property quickly and you're going to take 16 weeks to complete on it with a mortgage, maybe that's not that appetizing. So, well, I don't want to wait 4 months. Whereas with bridging, if everything's in line and your ducks are in a row, you can complete on a property in as little as 4 weeks. It's not as good as cash. It's nowhere near as slow as a mortgage, okay? So it's really working fast. The final thing that I absolutely love, apart from the fact you can buy uninhabitable properties, is the fact of the speed element. It's a team behind it that isn't a computer says yes, computer says no situation, which with most mortgage providers, it is yes, no, that's it, no conversation. With bridgers, it's like, oh, I can see you defaulted on that loan 6 months ago. You can have a conversation with us, explain the situation, and then the bridger might go, is a bit more risk. We're going to put an extra 0.1% a month on there. Is that agreeable? So it's very rare that a bridger just goes, no, thank you. They always factor in the new risk associated with the loan, you, the property, and anything surrounding it, and then apply the right return yield that they expect from you. So with both of these, of course, with mortgage, it's really based on you as an individual. With bridging, it's really based on the opportunity. But with both, if you want to get the best rate, short term and on the long term, you need to look after your credit file. So I really do recommend getting Experian, Credit Expert. There's loads of others out there. Just check yourself out. Even if you're not looking to buy now, maybe you're starting in 6 months' time, make sure you check, because you'll be able to solve any issues that are on there in a medium-term basis. Now, as I said, if you're looking for funding for either the mortgage or the bridging, LENDLORD is an amazing associate and sponsor of today's video, where you can get free access to all of the major lenders without paying the huge broker fees. And the way you can get access is by clicking the link below. It's completely free to sign up to get access today. Before wrapping up this video, I wanted to do some quick fire questions that you have been asking me in the comments of these videos. Can you get bridging as a first-time buyer? Yes, absolutely you can, but you do need to look around and think if this is the best option for you, because being a beginner, there's probably more risk associated. Can you get bridging in a company name? Absolutely. In fact, a majority of bridging is in a company name. Just bear in mind that doesn't stop your liability. You will need to sign a PG, also known as a personal guarantee. What's the cost of bridging? It's really going to depend on a few things, such as loan to value on the property, your personal situation, and the risk associated with the property. But very typically, you will be looking at 2% entry fees, 1% a month, and 1% exit. Is bridging on a buy, refurbish, refinance, a BRR, a must? Technically, yes, because you shouldn't really be breaking the rules of the mortgage when you're going through a refinance. That said, mortgages have an early repayment charge. So what you want to do is understand what the ERC, the early repayment charge is, versus the cost of bridging, and then make a calculated decision. Can you get a bridging loan for 100% of the property value? Yes, you can, but really only when you've got the right connections and experience, and you should be willing to pay extra. For example, most people lend out about 20 to 23% every single year on 100% loan to value finance. I hope this video has been helpful for you. If you're new to the channel and you want to find out more about buy-to-lets and other property investments, make sure to hit the subscribe and the notification bell. And if you got value from this video, make sure to lightly destroy the like button. And if you've not checked out LENDLORD, now's your opportunity. Click the link below and I'll see you in the next video.